Hello friends, I am Dr. Sonal Chandak. In this presentation, we will discuss on the origin and history of cost accounting. Friends, before going into the discussion, let us discuss something about cost accounting. As we know, for performing the production, we need to incur some variable cost and some fixed cost. Fixed costs are fixed irrespective of the production activity, while variable costs are those which vary with the variations in the production. Cost accounting considers all input costs associated with the production, including both variable and fixed cost. Most importantly, cost accounting is a form of managerial accounting that aims to gauge the company's total cost of production by assessing the variable cost incurred at each stage of production and the fixed cost incurred to perform this production smoothly. Cost accounting is used internally by management in order to make fully informed business decisions. And friends, in financial accounting, we require the information in order to make internal as well as external financial statement users aware or informed. However, in cost accounting, it is not required to adhere to the set standards and can be flexible to meet our needs of management. Cost accounting is altogether internal evaluation part, and none of the outside parties or none of the outside users directly ask or are interested in the cost accounting data. Whatever information they want, they may get it from the financial accounts only. Friends, we must be definitely interested in knowing as to how this term cost accounting has been coined. While discussing about the basics of accounting, the history of accounting, we rightly discuss that Luca Pacioli was the person who has lot of significance in the accounting world. The double entry method is still widely used and no other method has ever been capable of replacing it. It works and has for centuries together. Pacioli's book, Everything About Arithmetic, Geometry and Proportions, was the only one used for accounting study until the 16th century. Cost accounting today is recording, budgeting, analyzing, determining the cost for products manufactured. Although Pacioli did not actually invent cost accounting, he was definitely interested and concerned with tracking variable cost, variance cost, and working with the budgets. This is why the idea of cost accounting, particularly in a strategic manner, in a specific manner, must have came into existence in a systematic manner during the period of Luca Pacioli only. Friends, Luca Pacioli was not the man of accountancy. He still was known by the whole world as the father of accountancy. And this is because of the contribution in the area of accounts. He was the person to speak about for every debit there has to be a consecutive credit. When something is given, something is taken. He was the person who spoke about the different costs. He was the person to speak on bringing together all the costs, preparing a systematic statement of cost, and he was the person to speak on the budget for the upcoming periods. He was the person to speak on the variance costing. He was the person to speak on the variable cost as well as the fixed cost. But But the true industrialization, when it started, the cost accounting actually started working. The age of industrial revolution resulted in the establishment of the large businesses and organizations. These organizations were more complex and dynamic. So, the experts in this area thought that this must have led to the invention of modern cost accounting process in use. And so, the origin and evolution of the cost accounting can be traced back to the Industrial Revolution. The idea was to help the businessmen to record and keep a track of their cost and their expenses. Before the golden age of industrialization, most of the expenses of these businesses were what we would categorize them as variable cost. The cost relating to material, the cost relating to labor, and other such variable expenses which were directly incurred on the production, and along with the production, some expenses to be incurred on the sales. However, when industrialization took off, these businesses had more fixed costs. These are the costs that are not directly related with the production of goods and services. Some of the examples of fixed costs we can quote here are, say, for example, rent, depreciation, storage costs, because production started taking place on the large scale and the whole production was not sold immediately. So naturally that was required to be stored. So stores cost, etc. As railroads, steel industry, and other large industries developed, understanding the fixed cost became very important. Allocating them became the important part for the managers and the owners for the decision making and pricing and product development as well. Maybe probably this is where the cost accounting concept must have originated. So coming to the end of the slide, we can specify here that the concept of cost accounting must have emerged with the emergence of industrialization, wherein we started producing on the large scale, wherein we started incurring the fixed cost in the production, and we have started bifurcating our cost into variable cost and fixed cost. Of course, here we cannot forget the contribution made by Luca Pacioli, who has contributed lot of things so far as cost accounting is concerned, and that is the reason why today we could make our cost accounting a little more systematic. Thank you.